Teng Boo, thank you very much indeed for joining us. He's Chief Executive of Capital Dynamics Asset Management. Now, first up, what did you make of what the Fed's been saying?
Nothing out of the ordinary. It was pretty much expected. I think given the current circumstances, there's no way they can shrink the balance sheet. And what the Fed is saying is already a known fact. I mean, we all know from the statistics that the economy has slowed down.
Well, we know that, but the thing is, can we do we see it falling even further and in fact getting into this situation where we have another recession?
Well, I'm not a double-dip believer. I think, you know, last night, more important than the FOMC statement was the U.S. productivity figure. I think that was totally overlooked. And if you look at the details of the productivity figure, which was very interesting, because the total hours work, they are rising. And if you look at productivity growth in U.S., in the first quarter, in the last few quarters, they have been growing at a record pace, which is not sustainable. Now, when you have productivity growth at that kind of level, what it means is that companies are not really in a mood to hire. But when you look at the total number of hours worked, they are rising and pretty fast. It shows you that the employment situation in U.S. is at a major point of inflection, which means that going down a few quarters, companies in U.S. would have no choice but to start hiring. I think the productivity growth was overlooked, and I think it's a far more important economic report than the FOMC statement.
Very interesting indeed, Teng Boo, but let me just come back and play devil's advocate with you, and that's really down to companies bolstering, cutting, indeed, staff, as you've been mentioning here, but it's not about revenue going up, and that's because they've been shrinking the amount of workers, so that the bottom line is actually the thing which has been expanding. So how do you respond to that?
Precisely. You're totally right. The reason for the high unemployment despite 3-4 quarters of GDP growth is because companies are reluctant to hire. So what we are seeing, what we are looking at the productivity figures is telling you that companies have reached a point where there's so much you can squeeze out of the workers, and the situation in the U.S. economy is such that you are reaching a point where you can't really squeeze any more out of workers without hiring more workers to maintain your output or increase your output.
The trouble is, on the revenue side, if we don't see an improvement looking ahead, they're going to hold pat and keep things just as they are. That's the danger, isn't it? And that's why you're talking about the inflection point. Either we see a lot of hiring, or we perhaps see none whatsoever.
You're totally right. The revenue growth has been pretty sluggish, but the retrenchment in workers was so severe that going forward, you don't need a major increase in output or revenue to start hiring. All you need is for output or revenue not to collapse. And even if output or revenue were to stay at current levels, the companies have no choice but to start hiring.
Yeah, you also got to get something happen with the property side of things as well. And what's going on there, and what's your view of where we go next?
Don't forget, Richard, the U.S. Housing sector has contributed negatively. If you strip away the stimulus package, it's contributed 16, 17 straight quarters of negative contribution to U.S. economy. And you look at the way housing starts, housing sales have plunged, they are at the bottom. The point is, the question is, when are they going to recover? And if you look at affordability, house prices have dropped, mortgage rates are at decades low, and affordability is at very high levels. So you find that the housing industry probably will, once the employment situation starts to recover, I think over the next few quarters, you see better figures from the U.S. housing industry.
What about the dollar in all this? What about the value of the dollar? How is that playing out with the U.S. economy?
The next couple of months, you won't see the U.S. dollar rallying like what it used to be. In fact, you find that the pessimism over the Eurozone economies was too extreme. Germany, for example, is doing very well. Sweden is doing very well. So given that kind of development and the fact that the US economy seems to be pausing in this quarter and the last quarter, US dollar is unlikely to rally in the next couple of months. But as the recovery gather momentum again in probably the last quarter or early part of next year, then the US dollar will start to bottom and start to rally again.
Teng Boo, thank you very much indeed for joining us. Teng Boo there for Capital Dynamic Asset Management.